Okay guys, doing a revision exam style question for Hannah's Hobbies and Gifts. Just with this one, before we get started, it doesn't seem the balance sheet balances up correctly. So what I want you to do on your question here, I would like you to change capital contribution $5,000, change that to 6350. Then this should hopefully all work for us. Alright, let's get started. Now, what we're doing here is we're using the exam template, which is not a great deal. And so, when confronted with this exam style template with nothing, what I would do first of all is just to build our shell of our cash flow statement. So, following the format of our pro forma, page 496 of the text, I'll go and put together our shell of the cash flow statement first. So it's business name, and for the period ended June, and the question is 2012. Bold cash flow statement there. Alright, and so we build our shell with our three sections: operating activities, investing and financing. So net cash provided by, and so if it's a positive number with this subtotal, then it would be net cash provided by operating activities. However, if it's negative, it would be net cash used in operating activities. Okay, and then cash flows, investing activities. Now, you might try and cut corners. You might copy this. Hit F2, divided by investing activities. I don't know. Maybe you might find that faster. Try and look for little shortcuts for yourself. Cash flows from financing activities. Inflows. Oop, can't spell. Used in financing activities. Again with the spelling. Jeez. Alright, so then we have net increase. Cash at the beginning of the year. Cash at the end of the year. Or reporting period, as it has in the template. Cash at the end of the year. Alright, so there's our shell. I'm going to make each of these headings bold, so I'm just holding down the control key, highlighting all three of those, and making all of those bold. Inflows and outflows, holding down the control key still, and make all of them control I for italic. And there is our shell. looking at Hannah's Hobbies and Gifts, we can see we've got accrued revenue, prepaid expense, accrued wages. So we're going to have 3 balance day adjustment reconstructions, as well as our payments to suppliers and receipts from customers. So we'll make a start. Receipts from customers, and we'll go down below and start our reconstruction. Receipts from customers. Bold. Okay, and so we'll start with our accounts receivable. Year 1. Then we want to add our credit sales. And so then we'll take away any bad debts or discount expense. So we've got bad debts in there, so we're going to minus bad debts. And minus accounts receivable. Year 2. And so that's cash received from accounts receivable. And then we want to add cash from cash sales, if we have any. I think in Hannah's Hobbies and Gifts we do. Alright, so accounts receivable, year 1. Go to our balance sheet. Accounts receivable was $400. Our credit sales from our income statement is $80,000. Minus bad debts of $332 from our income statement. Minus accounts receivable, year 2. Underline, auto sum, $79,368. Then our cash from cash sales from our income statement is $20,000. $99,368. Address that up, make it bold. Also go and just update the format of this column here. Put some commas in there. Okay, and that's our receipts from customers. Don't forget to tick everything as we go. So accounts receivable, cash sales, credit sales, bad debts. Tick them as we go, and bring this figure up into our cash flow statement. Because our other receipts from other operating revenue and payments to other operating expenses are influenced by our balance day adjustments, really what I would tend to do here would be to pretty much go and knock over all of our reconstructions that we have to do before we go and build our cash flow statement. So I'm personally going to knock over all of the reconstructions now. Payments to suppliers. Accounts payable, year 1. And then we want to add the credit purchases. Now I think we've got, do we have any discounts here? No discounts in this one, so just accounts payable. I'm just going to hit F2, arrow to the end, year 2, cut down on some typing. Alright, so accounts payable, year 1, we've got $300 from our balance sheet. We want to add credit purchases. Now our question doesn't tell us what our credit purchases are, so our way to figure out our credit purchases, we want to equals inventories for the current year, or inventories for year 2, 1452, minus inventories from year 1 plus our cost of goods sold, which is $73,000 from our income statement. Okay, so what we're doing is we're getting our movement from year 1 to year 2 in our inventory, adding on our cost of goods sold. That gives us our total amount of inventory that was purchased during the year. Okay, so we're adding that, and then we want to subtract accounts payable year 2, 750. Auto sum that, gives us 73,502. We've always had this in our reconstructions, although we've never used it. Okay, so there's our payments to suppliers, bold that. And so we're going to have other operating revenue down here. And payments or other operating expenses. And we'll do our balance date adjustments over here. So we've got accrued revenue, which is interest. So accrued revenue year 1. Revenue amount from our P&L. Our income statement. Centered, just because I'm a little particular about it. Okay, and so from our balance sheet, accrued revenue, interest, then the next one is prepaid expense insurance. Okay, so prepaid expense. 2. Expense F2, arrow to the end, year 2. And then looking down our balance sheet, we've got accrued expenses, wages. Expense year 1, expense amount P&L, cash. Okay, so our accrued revenue year 1, so we go to our balance sheet, into our assets. For Hannah's Hobbies, we've got $25 year 1. Our revenue amount, interest revenue, is $220, and then minus accrued revenue year 2, $50. Gives us $195. Make that a total. Okay, prepaid expense from our balance sheet. Ticking everything as we go, I'm just ticking accrued revenue. So our prepaid expense, we start with 0. Our expense amount from our income statement is 1,300. And we add a prepaid expense year 2 because this is the total amount was paid. And then with our balance day adjustment, we determined that some of it relates to next year, so we do the journal out of the expense and put it on the balance sheet. So, but all in all, we've paid $1,500 all up for insurance. And accrued expenses, where are we? Balance sheet, liabilities, starting balance, $80. Add our expense amount, $24,000. And then minus our prepaid year 2. Sorry, our accrued year 2, $160. Order sum, $23,920. Okay, so that's those done. Ticking things as we go before we move on. Tick our accrued expenses. Alright, so let's keep going with our statement of cash flows. So looking at a pro forma, our next items could be dividends received. Hannah's Hobbies doesn't have any dividends received. So then the next one would be interest received. Okay, and so we've got interest received, okay, equals, and our interest revenue as part of a reconstruction here. So we're going to pick up that total and put that into our cash flow statement. Let's insert that, another line there, and we've got other operating revenue. Save yourself some typing, you might go equals, because we've put it down here. Other operating revenue. And looking at our income statement, interest we've taken care of, so all we're left with is commission revenue. And so because there's nothing else, we don't really need to do, I mean, you can put in commission, $6,000. Not really any need to, but because it's just one figure that goes straight into our cash flow statement. And that's it for operating inflows, bottom border, subtotal, 105,563. Okay, operating outflows. Save ourselves some typing. We can come down here to payments to suppliers, and we can go down and grab this figure here, 73,502. Next item, payments to employees. And our wages was part of a reconstruction, so we're going to come down here and get this figure here. That's gone straight in. And I'm going to insert another line. Equals payments for other operating expenses. Cut down on some typing. But we need to get some items in here. So you will be left with a few items on your income statement still unticked. Insurance was part of a reconstruction, so we're going to pull that into this section here. Depreciation, very important with this exercise, and potentially your exam. Depreciation, we're remembering that this is a non-cash flow. So anything depreciation related, depreciation of vehicle, accumulated depreciation over here, we don't factor into our cash flow statement. They're non-cash flows, we leave them alone. So depreciation, in your exam, you might just cross that out so that you know that you don't have to put that in. And advertising needs to go in as well. So let's work down Okay, so bad debts has already been taken care of, wages have already been taken care of, insurance, and that's part of a reconstruction, so we're going to come over here, get that 1500, and then back to our income statement. Working down, we've got advertising of 930. Okay, so we'll come up here, get this 2430 up into our income, up into our statement of cash flows. That's everything. So it's subtotal. Okay, net cash provided by operating activities equals inflows minus outflows. Gives us 5711. Okay, so with our Hannah's Hobbies and Gifts, we should find now that everything on our income statement is ticked. And we will move on to our investing activities. Okay, so from our balance sheet, we can see investing activities is typically to do with the purchase and sale of non-current assets. So we're looking down here. Bank we look at later, inventories we've taken care of, accounts receivable we've done, balance day adjustments we've done. Okay, furniture, 4,000 in the previous year, 7,000 this year. So we've had cash go out of the business in order to buy furniture. Motor vehicle stayed the same, so nothing to worry about there. Depreciation, non-cash flow, so we're not looking at that one. Building stayed the same. And we had shares in Telstra, previous year 2,000, now 0. So we've sold our shares in Telstra, so that's cash would have come into the business as a result of that sale. So, inflows. We want proceeds from the sale of non-current assets. I'm going to separately itemise that. Shares in Telstra. And because it's the only item, I'm going to take that straight into the middle column. $2,000. So that's that one done. And then our outflow was for furniture. So we want payments for non-current assets. Furniture, and that went from 4,000 to 7,000, so that's 3,000 in there. Underline there. Do a subtotal over to the side. Equals inflows minus outflows. Minus $1,000. So $1,000 cash used in investing activities. Okay, and so we go down now to our financing activities. Make sure you've ticked furniture and shares in Telstra. And maybe in perusal time you might go through and identify, you might put a cross next to buildings because you will have identified that you don't have to do anything there. You might put a cross next to motor vehicles and accumulated depreciation, so you know you don't have to do anything with those ones during your perusal time. Just trying to use your time a little bit more wisely. Same with loan from the bank. Not even at home. I'm in C3 and the geckos are still coming to join us. So loan from bank doesn't change. Mortgage doesn't change as well, so you can put crosses next to those, help yourself out during perusal and use your time efficiently. Okay. Inflows from financing activities. We go to our balance sheet. Okay, financing activities. typically either proceeds or repayment of borrowings or inflows, outflows of capital. Okay, so proceeds from borrowings, there are none because these have both stayed the same. However, we do have a capital contribution. Remember, as I said at the start of this task, I wanted you to adjust this figure to 6350. Remember, when we're doing financing and looking at capital contributions from our owner's equity, we're not comparing last year and this year, okay? Because in a perfect world, our balance sheet, our closing owner's equity from the previous year becomes our opening capital there. And any figure that's in here, we take this whole figure and put it into our cash flow statement. So, cash input into the business from the owner. Remember I said 6350. So proceeds from capital contribution. Only one item, so straight to the middle column. Nope, sorry, 6350. And outflows, nothing for borrowings. However, we do have this drawings amount of $1,000. So, payment of drawings. $1,000. Underline there. Net cash provided by equals 6350 minus 1,000. Gives us 5350. Underline. Auto sum this whole column. $10,061. Okay, cash at the beginning of the year from our balance sheet, 2,200. So therefore, tidy up this format here. $12,261 marries up with 12,261 on our balance sheet here. So we're correct, thanks to the adjustment for capital contribution. So I'm going to wrap up this video here. That's it for our cash flow statement and our reconstructions at the bottom. Hopefully that was manageable for you guys. When using the cash flow exam template, the blank template, create your shell first, and you might even go straight down, create your shell for your cash flow statement, and because you might have crammed and trying to remember all of these things, you might go and create all of this template first as well, instead of me sort of starting doing receipts from customers and then doing it all. But anyway, I hope that makes a bit of sense. Bye for now.